Hi, this is Jack from AlphaCharts365 with a State of the Market update. Before we get started, this is not a recommendation to buy, sell, or hold any stock or security. This is for informational purposes only. All right, so we're going to start with the SPX as we usually do, and it is in a beautiful looking uptrend. Again, maybe getting a little extended. We'll go and measure this out real fast. So, it's right about 2%, 2.12% from the 23-day, and it is almost 4.5% from the 65. So, the EMA, that is. And so, yeah, maybe a little extended, so maybe needs to move sideways or come back a little bit. But still, the uptrend is beautiful, intact, and looks like it wants to go higher. Moving on to the Qs. Same situation. Nice uptrend. Again, maybe getting a little bit extended from its moving averages. So maybe needs to pull back just a little bit or go through time, move sideways through time, let these moving averages catch up, and then the market should go higher from there if the trend continues. Looking at the IWM, you saw a little bit more of a pullback here on Friday. Again, this is the holidays, so volume is very low. These pullbacks can happen, especially during the holidays. I don't think it's anything to be worried about. Trend is higher. All the moving averages are moving higher. Again, this was a very large base that it just broke out of. Can it come back and retest the 23-day EMA? Sure, that's probably very likely. Maybe even cut below it a little bit to this, 162.85-ish area, 163-ish. But everything says this trend should go higher. Looking at the Dow Jones Composite, same situation, moving higher. All trends are higher. Things are looking really, really good. Again, it just recently broke out of this longer base, going back almost 2 years basically. So things look really good there. Let's look at some important subsectors and sectors, semiconductors being one of the most important. And so, one of the things I wanted to highlight here is that we had this nice pop, and now we're kind of moving more in a sideways manner here. If you notice, again, it is holidays, but since the pop, our volume has been decreasing. So to me, this says it's an absence of sellers, right? So the buyers maybe got a little bit tired here, right? We got a lot of buying right in here, but nobody's selling. That's what this says. It is the holidays, so maybe that's a little bit exaggerated, but that's what I'm going with, especially since the trend is higher. I think SMH looks really, really good here. And moreover, as a piece of the overall market, if SMH is going higher, chances are the market's going higher too. Financials. Let's go to a weekly chart here again, because that really shows it better. Now here's financials on the weekly, right? So we're going back to 2007 here, right? March 2007, and we're back up. 2007, same high right there. Now we're back up in that area, and now we're kind of stalling. Now I drew these arrows in actually a couple weeks ago because that's kind of what I expect. I expected it to kind of come into this range. It's got to chew through some more of the supply. This is a huge psychological level right here. So what would I expect? Either sideways or slightly mean reversion right here, and then the breakout. That would be a very strong breakout. That was actually my best case scenario. And again, this is a weekly chart. So if you look at it, it ran up, and now it's kind of moving sideways. Again, will it come down and maybe meet the 23-day EMA? Maybe about, 29-ish, 29.50-ish. That would be fine, right? Let it come down and then bounce up and break out. That would be an extremely, extremely powerful breakout. And then XLF would not only be healthy for the market, it would also be a place that you could actually manage great risk against for potential trades. Looking over through the next one, which is lumber. And let me go back to a daily chart here. Lumber. broke out of this area. We could maybe adjust this slightly. Yeah, it broke out, and now we are kind of moving sideways. Again, lumber is one of those economic drivers, and so if lumber is going higher, that means there's demand for wood, and if there's a demand for wood, people are working and economic activity is happening. And so that's the way I read this chart, and so everything looks extremely well with lumber. So again, bodes well for the market overall. I'm going to switch this to a line chart now, and we're going to look at the put-call ratio. So equity only put-call ratio. So we're seeing kind of a lot of exuberance, right? We could call this exuberance in the market. Calls, exceeding more into more of an extreme level and hitting it more often. So that in and of itself isn't a reason to sell, by no way. But it is something that says we could move sideways or we could have a slight or sharp pullback to kind of shake this out, get it more in this middle range area, and then we could then continue moving higher. So it kind of goes with what the charts are saying. We're seeing a lot of, so far, sideways movement, which is going to wear people out, and people are going to get frustrated and potentially sell into that sideways movement. Now, again, it's just consolidation, and I think that the put-call ratio is showing that there's a little bit of exuberance in here. Again, could we continue in this range for a while? Absolutely. I put a lot more credence for things on the put side, the bearish side, than on the exuberant side. People can stay exuberant for a very long time, and this can stay in this range, kind of chopping back and forth in here for a while. So I'm not too concerned about this, and I do think that sideways movement or small pullback will shake this out and kind of reset this chart. Looking at the next chart is going to be, SPX/TLT. All right, so SPX/TLT, again, you see that this downtrend was broken. It's a nice bottoming action right here. And we broke out, went higher. Again, there's that sideways movement I was talking about. Equities are still outperforming bonds, safe havens. And I think that you can see the trend of equities outperforming has all turned up and moving higher. I think equities continue to outperform safe haven assets such as bonds. Moving on to the VIX. VIX, the only thing I use the VIX for is to see if we are in a bullish range or a bearish range. And I use this between 16 and 17 as kind of demarcation of bullish and bearish. That's how I use it. So I still see us in a bullish range, right? 13.4 is where we closed on Friday. So we're in a bullish range. And I think that again, there's market continues higher. I mean, there's no fear in the market right now. Could this spike up like this, put call ratio resets, and we drop a little bit? Sure, that's possible, but all the trends are higher. So everything to me looks pretty good. All right, so let's go into some key sectors. As soon as I reset this to candles. All right, so we talked about XLF. Financials, again, I think sideways consolidation and maybe even a little bit of pullback, make a higher low, another higher low, because we've had a few of them now, and then we could bust out of here. And in the XLF, I think the IYG is the place where I'd want to be, and that is actually where I am positioned in multiple stocks in this subsector. And if you see, this was from 2007, and this already broke out. So XLF hasn't broken out yet, but IYG Financial Services has already broken out and actually had a very strong move higher. So again, this is a weekly chart now, and now we're starting to, again, we're getting a little tired here, so we're going to move, looks like it's moving sideways for a few days. Again, may even pull back a little bit, no big deal. But again, this is leading financials higher, and I think financial services are the place to to be for the next move higher in financial stocks. Looking through to the next one is semiconductors. Semiconductors, again, you see the decreasing volume. It had a big breakout, big move higher, I should say. Sideways movement here, letting the moving averages catch up. I think semiconductors continue to lead this market. There's nothing here saying that they're not going to continue higher. Moving on. And then the other sector I think that has a lot of opportunity is healthcare. Huge move up, sideways movement, and now these moving averages it's kind of extended from the moving averages. So I think that this really does move higher. It was a big breakout here. Just needs a little backing and filling, and I think that healthcare has many opportunities in there also. Looking outside of the United States, looking at China, this looks like a really interesting chart here. This is the MCHI, which is, I believe, the China large cap. And let me just make this chart a little bit nicer. You can see how this was an important level, and boom, we're back to that important level. So, and not only that, but see now these moving averages are now all lined up nicely and starting to turn higher. What I would expect to see here potentially is maybe some pullback and then that breakout, right? We don't want to see a pure breakout here. It was a pretty good move higher. What a stronger breakout would be either a pullback here and a breakout, or a breakout, then a pullback and a retest and a breakout. Either one of those would be fine. But China is definitely one that I'm watching. And looking at Queb, which is the China internet, again, this one looks very, very good too on the Chinese front. You see this is an important level, or has been an important level in the past, and I think that it continues to be. So maybe a little pullback here, and then a breakout. Like my moving averages are all aligning and now curling up. So I think China has a lot of opportunity going forward, especially going into the new year. And the last sector I'm going to talk about is European banks, European financials. You could see broke the downtrend. Looks like a double bottom. This would be your confirmation. It's actually hit the area, pulled back nicely and smartly, nice organized fashion. Moving averages are curling up. I think European banks have a chance to outperform. And again, I do have some exposure to European banks also right now. But I think European banks. So US, especially we're looking at, semiconductors, financial services, and potentially healthcare. And China, especially the internet-related Chinese stocks, and European banks. I think all of those look great going forward. Market's very healthy. We may get a little shake and bake and a little pullback, a little sideways motion, a little bit of frustration going into the end of this year, maybe even the beginning of next year. But there's no reason to be bearish that I can see at this time. Happy New Year and happy holidays to everybody. And we will talk to you soon. Thanks. Bye.